Everybody, this is Lorillia. Welcome to another episode of the Never Lose a Deal podcast. Today's show is being sponsored by Leverage Portfolio Capital. If you're a real estate investor or business owner who is looking to get your next deal funded for fix and flip, DSCR, please go to our sponsor's website at www.leverageportfoliocapital.com. So today's show is all about money follows real estate deals. That's right. Money follows real estate deals. And so the reason why I decided to do a topic on this or do a podcast on this topic is based on some of the things that I'm working on with how I'm helping clients, as well as what I have seen in the marketplace. So I want to be able to uncover and show individuals a different, um, let me say, a different way of framing and looking at things when it comes to real estate. So I always say that this show, Never Lose a Deal, the Never Lose a Deal podcast, is primarily about creative financing. When I talk about creative financing, it is to explore the non traditional ways of how you can get your deal funded. And so that is what I really focus on, on this podcast. And so I want to be able to share with you some of those things. So my goal with this podcast, at least today and in the future, is to really explore and go deep, dive deeper into how I can really showcase what that looks like, because there is 100 ways to skin a cat. So there's not just one way of doing creative financing. Creative financing can look like a lot of things. So I never want to let a person know that this is the only way. I'm just giving context to the way that I structure and put creative financing deals together. So it's never just one thing or one strategy. It can look different for any person when they are exploring that topic. And that's what brings us into today: money follows deals. So last week, I had several conversations. I had conversations with individuals who are not my clients, and I've had conversations with people who are my clients. So I'm going to talk about first the individuals who are not my clients and what advice I gave them. So I truly believe that in this current market, as I film this podcast, we're now in March 2025. A lot of things are going on. We got a new administration that is in, who is the president here in the U.S. We got some topsy turvy things going on in real estate, depending on what area of real estate you are in. There are some people, you have a school of thought of people who feel like that there is lack of inventory, and then you have a school of thought of individuals who say there is plenty of inventory. But at the end of the day, I truly believe that there's going to be a big wealth transfer that is going to occur and that is going to happen. And the reason why I say, based on what I see this market looking very similar to 2008. Not in the scheme of a real estate, a fall in real estate like we experienced in 2008. I don't claim to be no economist or no future Nostradamus, but I say that to say, in terms of the way you are going to acquire real estate, I do think that primarily the way values are going up, that if you truly want to be in this industry, that you're going to have to want to explore creative ways of doing things. And so with this wealth transfer that's going on, many of the people that I work with are those who, at least who tune into the podcast, that is really what they're seeking. They are positioning themselves and looking for ways of how they can expand their portfolio. And so that is what I want to explore. So going back to the conversations that I had, I first want to talk about the individuals who are seeking funding. Um, I truly believe that, and many of these conversations came from individuals online. I really believe that if you are a person who's in a place where you feel like, okay, um, I have a deal or I want to do deals, but I am limited in funding. What your funding specialist will not tell you is that there is plenty of money. There's plenty of money being circulated. There's no run on the banks. There's no shortage. But what I do realize that there is a shortage of, and like I said, primarily on this channel, there are no secrets. There, I'm an open book. I don't like to dangle the carrot in front of people and have people to believe that this is this imaginary land that, only a certain group of people only have access to. That's never my thing. I truly believe that if you desire something, to become a student of it. And as corny as that sounds, because in this microwave society, the idea of being a student is really a turnoff. But I'm going to say this, and I can't say it enough. If there is really a wealth transfer that could occur, you want to be part of that wealth transfer. So going back to what I was saying, um, what I noticed there is a lack of is people who really, they don't know how to underwrite a deal. They don't know how to communicate what a deal is. And what happens is that they approach the place of that I just need money. So when I had a conversation with some of these individuals, and for example, one person was a wholesaler, and this person truly did believe that they are in wholesaling and that they want to get access to funding. So if they see deals, they want to be able to take them down and be able to move forward with the deal. I'm gonna just pause right there, and only because I started off in real estate doing wholesaling way back in 2008, when we experienced one of the biggest real estate fallouts that, that pretty much some people were comparing it to the Great Depression, but it wasn't that. But it was, I mean, banks did fail, a lot of people lost homes, what have you. But someone like myself, who I had got started in real estate, I can never subscribe to the school of thought of someone now in 2024, when there are resources out of wazoo. Many resources didn't even exist in 2008 that are here in 2024. So to hear someone saying that they're a wholesaler and they need to get access to money in order to do wholesale deals, I told this person, you need to hunker down and get deals. But this is what now once again, like I said, I'm an open book. There's no secrets. If a person is a wholesaler, I'm gonna tell you why that whole dynamic of I'm a wholesaler, but I want to get some funding, and if I see a deal for a rehab, I'm gonna do it. It never works. It never works for the person who has never did deals. I'm not talking about the person who has a flow, meaning they have past deals that they can look at. I'm talking about the person who just never have did anything. All they know is that I can possibly put something under contract, resell that contract, get a finder's fee, and sell it to an end buyer. But because they have never did that, they have no past performance. What it's going to take for you to be a rehabber versus a wholesaler is two different skill sets. And I tell every wholesaler all the time, if you really know how to get off market deals that are underpriced and that works for a rehabber that's in your market, you will never have to worry about eating again. You will never have to worry about funding again. I told this person, whatever market you are in, find your local hard money lenders in that area. Now, this I'm going to share with you why there's no shortage of money. And talk to them about how they would lend on a particular deal. You listen to what they say, and then you start sharing with them what type of deals you're doing in terms of knowing your numbers. And this is where underwriting comes in. And this is the part that many investors, whether they're wholesaler or not, they don't know how to underwrite their deal. Meaning, you don't know what you should be putting the property under contract for. You don't know the repairs. You don't know anything. All you know is that you need money. Well, lo and behold, that's not going to work, because if you do know how to underwrite deals and you know how to find off market deals that works for investors in your market or investors who want to invest in that market, funding would never be a problem for you. But the missing piece, and this is where, once again, your funding specialist or experts don't tell you, is that they have people looking for funding. And like I said, going back to myself in 2008, I never had a problem finding people to buy my deals, even when everything was doom and gloom in society in terms of foreclosures everywhere. And I was in a particular area here in New Jersey where almost every other house was boarded up. There are some streets in that particular city where the whole street was literally boarded up due to people who had lost homes, walked away, or what have you. And even in that market, there were people who were buying and there were people who had access to money. It was never a case of, and this is 2008. So me being a person of a certain age, I don't even know if people were doing social media in 08, because I know I wasn't. I wasn't doing no social media in 08. So I wasn't doing MySpace. I don't know. I hear that Facebook was around, but I wasn't using it, and I wasn't on YouTube. So I literally had to put foot to ground to really do my legwork. I say all that to say money follows deals. This isn't a wholesaling conversation, because I could pick apart, and I could take a multifamily and show you how that works, what have you. Money follows deals. There are people right now who literally know they're earning nothing in their 401k. They're earning nothing when it comes to their stock portfolio. I'm not talking about people who invest in options and futures and all that. I'm talking about people who just have their money sitting in a stock portfolio. They would rather put that money to work. And that is what a lot of what I do when I work with people, sharing with them opportunities of how they can put their money to work, or investors who have raised their hand and saying, my money isn't doing much, let me put it to work. I say that to say, okay, that was, once again, like I said, a conversation that I had last week with someone saying, I'm looking for money. No, you don't need to look for money. You need to look for deals, and you need to know how to underwrite the deals. And once you know how to find deals, underwrite deals, money would never be a problem. Mark my word, money will run to you. Okay, well, let's go to the other side. Then I had a conversation with a client of mine. Wanted to touch base, see what they were working on. Well, lo and behold, after talking to them, they said that they have access to too much money. So this particular client, and I don't want to share all the details because I do plan to have them on a podcast episode. And I want, because I told them, I said, this is some good stuff. I got to have you on the podcast. So, understand you are going to retell this whole story. But to give you an abbreviated version of this story, worked with this person in 2021. I'm not going to say if it's a male or female because when that person comes on the show, there is a testimonial. If you go to my YouTube, to the podcast listeners, of this person, but I'm not going to disclose all that because I'm going to wait till the person comes on a podcast. Well, with that being said, in 2021, I worked with that individual. That person was a active rehabber, that meaning that they had did real estate in the past. And what happened was that they hit a kind of a tight spot in 2020 due to the pandemic where they had a rehab that they were working on, but they had to pull out due to the shutdown, and they financially just couldn't sustain it. With that being said, that led that person to saying, I need other vehicles, other ways to be able to finance what I want to do with real estate. No, that person didn't walk away. No, that person didn't say real estate was a scam, because that person had a past performance of what they had did in real estate, but they had realized that they had hit a tight spot in 2020 when nobody could have foreseen. Like, if you were an adult in 2020, no one knew it was going to happen. The signs were not on, the wall or what have you, that the whole country and the world was shut down. With that being said, that led that client of mine to say, I have to find other options. Well, lo and behold, they found me. And when they found me, I was able to assist them and get them financing. Why? Because they had things going on. They were coming from a place of, these are the deals that I am currently working on, and I need to find a way to finance these deals. Well, lo and behold, I was able to help them. Hence, keyword, doing deals. I tell people all the time, I'm very clear on who I can help. I'm definitely not one of these people, and I am not ashamed to say I can't work with nobody who don't have any past performance. I don't sell real estate inspiration. I don't sell funding and financing inspiration. That's what a lot of people who are in a tight spot, meaning they can't seem to move to the next goal, is because most people are being given real estate inspiration, from the financing piece to the funding piece to the acquisition piece. So what happens is you're full of inspiration, you're full of gems, you're full of information, but you can't execute. I know my sweet spot. I help people execute. But the way I help people execute, they do have to have a past performance of things. And I can go really deep on this, but this is not what this topic is about. There is a reason why it's easier to work with those individuals, because there's an expectation that that person has, not of me, but of themselves. Whereas the other group of people, the expectations are just lofty. But with that being said, with me being very clear on who I can work with, people who clearly they realize that this is a problem they're having, financing. Because most people do know, they don't know everything that has to do with financing. They may be very good at what they do when it comes to real estate, but the financing piece they need assistance with. Well, after talking with that client, helping them back in 2021, we still continue to work together. And lo and behold, we started talking about what they're currently working on now. And they went into how they are working with private money individuals who are lending on their deals. So, like I said, not going to give all the particulars because I'm going to wait till that person comes in. But hence, and I said to that person, to that client of mine, I said, it's interesting how you don't have a money problem. money comes to you. But notice, and this is the thing that I want you to understand, to the listening audience, the person had deals going on. They were working on deals. And as much as I would love to share all the details, I don't want to take away when a person does come on the podcast. But let me just say the person had things going on where those individuals who want to lend on the deal could lend. And that leads me to my last piece, and that has to do with me. So, here on Never Lose a Deal podcast, I talk about creative financing. I talk about out of the box strategies on how you can get your deals financed. I help real estate investors with financing with DSCR, fix and flips, construction loans, business funding, what have you. One thing that sets me apart from other people who help people get financing is I do help my clients source deals. Once again, remember the skill set that I talked about in the beginning? If you know how to find deals, you will never not be able to eat a day in your life. Well, I learned that skill set in 2008, and it has continued to compound and has continued to allow me to still eat in any market. Because the one thing that I know, as long as there's real estate, there's going to be deals that people need to buy, which is why I call this podcast a Never Lose a Deal podcast, because people are always looking for deals. Now, if you're looking for deals, I'm able to match investors who need financing, and lo and behold, they are looking for deals. It's a win-win. So what I'm going to do is I am going to share my screen, and I'm going to do a brief overview on what I am working on. So I believe you all are seeing my screen. I pray that you all are. Let me come back because I'm not sure. Okay. All right. So currently right now, what you are looking at is this current fix and flip case study here in North Plainfield. So North Plainfield is a suburb here in New Jersey. If you're not from New Jersey, and maybe you're familiar with the city of Newark, New Jersey, it's about 30 to 35 minutes from the city of Newark, New Jersey. So this is a suburb. And so like a typical suburb, you got your single family homes or what have you. And so once again, like I mentioned, I source deals because I know that I can provide financing, and if people can qualify for financing, they can get deals. So let me just be both pieces of it. So this is a deal that I was able to source with the marketing methods that I have put in place. And so this deal, a real estate investor I'm working with, going to be purchasing it for $215,000, and it has an ARV of 485 and a rehab budget of 52. I wish I should have added the other pictures, but really those pictures wouldn't have did it no justice. But I will say the bones of this house is good. Pretty much it's not a full, it's not a gut type of flip. Nobody's ripping out walls or what have you. It's just going to be some updated paint, updated kitchen, updated bathrooms, foundation is good or what have you. As you can see, the exterior is good. And so a person, without me going on a deep dive, but if you know how to calculate the um the numbers on this deal, a investor would invest in this deal all day long, which is why I was able to get a fix and flip loan for this investor. So here I am doing one piece of it where I help them source the deal. Then I'm also going to help them get the financing for the deal. So just to run some quick numbers, and I should have went more detail on it. Maybe I'll do another podcast episode where I can go more deeper on the numbers. But with an ARV, meaning ARV is what the house could sell for, and that's on the low end. Because what I am going to show you, we were very conservative. We can be very aggressive, but due to the purchase price of us getting it so low and the repairs being very minimal, because like I said, we're not doing no full gut. The house was, well kept. We have a very, as you can see, the rehab budget is 52. We were still being very aggressive with the rehab budget because what this particular investor is going to do is they are going with the lender that I have them working with. They are going to get the financing for the purchase. So lender's going to put in 80%. They got to come up with the 20. That's not a problem. But this is where it gets creative. The lender is going to lend on the whole 100% of the rehab. But the thing is that, and this is what a lot of investors don't know, this particular investor is not going to take a draw at closing for the rehab. They've partnered up with their private money person who came on to that. They are part of this deal too, and it was just cheaper for them to use the private money for the rehab as opposed to doing the lender. And I know many people say, well, how is that the case? The lender's going to give 100%. Well, you still got to pay on the money. So based on the rates of what the lender is going to lend, it came out cheaper to use the private money that they're partnered with. And that is what I specialize in, to go really deep. Now, the only way to do that is that you literally have to work the numbers. So we did the underwriting on this deal before I even presented it to the lender, because we did let the lender know that although we will accept the 100% financing on the rehab, but the investors only going to draw on it if they need the money, because they have their own money. And if anything, that's a win-win for the lender. There's no lender who is going to frown on um you not using their rehab money, because at the end of the day, now they have less risk, because they see that you are taking a large part of the risk by you using your rehab money. So, like I said, this is a creative deal in the making. I didn't do a deep dive, but I'm just giving you an overview of the idea of money follows deals. This particular investor is working with a private money lender along with the hard money lender. They're going to partner together on this, and they're going to use their private lender's money for the rehab, because it just comes out cheaper, and it's a win-win for the lender who is lending on the purchase, because now they have less of a risk. It's a win-win all the way. But the only way we were able to do this, and I was able to break this down for this investors, I had to show them the numbers. Now, let me come back over to, I want to just share this because I want to share the ARV just so people can know. Now, a lot of people talk bad about Zillow. Oh, Zillow this, Zillow this. Let me tell you this. Zillow is a platform, if you use it right, it will give you data. You say what you want. I know there are some bad things about Zillow, like the Zestimate and all this other stuff. But when it comes to finding the sales of a particular property online, bar none. Because at the end of the day, the house sold for what it sold for. So I just want to share with you, just to give you an idea, because I want to always share the sources of how these numbers has come about. We're not just pulling these numbers. As I told you, I put in North Plainfield. What is going on? Oh, I'm about to die. So North Plainfield, New Jersey. And so let me just share with you the souls. Now, I'm not going to do a deep dive, but I just kind of want to share with you. Remember, I told you we were very conservative with the souls. As you can see, 580, 580. These are all single family homes, North Plainfield, 540. Notice $500,000. Very conservative, very conservative with the sell price. Could have gotten very aggressive. So I just want to share. I was sharing, some of the homes that sold in the North Plainfield area on Zillow. So as you can see, 585, 520, 690, 450, 443, 400. And so just like any other neighborhood in the US, it's all gonna, the ARV is all going to be, based on, is it the same type of home, is it in the same community, or what have you. But we were very conservative with the numbers. So I say all that to say, that is why I did this podcast episode. Money follows real estate deals. If we are really entering in one of the biggest wealth transfers that they are saying that is going to occur in the next couple of years, now more than ever, you need to really hunker down and understand how to really find deals, underwrite deals, examine deals, and be able to communicate that value to a lender, communicate that value to, if you're looking for private money, to be able to communicate that value to even to a end buyer. And so that is primarily what this channel is about. So I just wanted to share with you that yes, there's plenty of money out there and there are deals, but you just have to find creative ways to find those deals. And that is what this show is all about. As always, just want to give another shout out to the sponsor today. Our sponsor for today's podcast is Leverage Portfolio Capital. If you are a real estate investor or business owner who is looking to get your next real estate deal financed using asset-based lending, DSCR, fix and flip construction loans, fixed to rent, please reach out and go to www.leverageportfoliocapital.com. So once again, this is Lorillia, and I will see you in the next podcast episode. Bye-bye.